it is pretty safe to say that investors are heavily relying on the Fed to support the continued upside in this market that we have seen so far. But that being said, Mohammed makes a good point. There's still a lot of uncertainty out there. We're making progress on reopenings. We're making progress on vaccines and treatments, but we're not certain about a second wave. We have that $600 bonus and unemployment expiring at the end of July. We don't know what's going to happen to that. What does extra stimulus come in the form of at the end of summer? So I think there's still enough uncertainty in the markets. There are 40 million people that are unemployed, 15 million people not paying their credit cards, that it is a little bit questionable that markets are trading at these levels so easily.
Mike, whether it's the Fed specifically or just central bank and government stimulus more broadly, it's had a big impact. And interesting today that the higher the session came pretty close to the European close. And just wanted to point out the fact that Germany closed up 3.8% today on talk of optimism around more stimulus coming out of Germany. And that certainly helped risk sentiment earlier this morning here in the U.S. too.
Oh, for sure. And the emerging markets, ETFs up 2% today. It's been up on this winning streak more than 1% for a few days in a row right now. It's as if the world is kind of, looked at its sort of risk allocation and said we may not own enough risk if, in fact, we're going to have a stimulus-aided recovery here. Doesn't mean everyone's right, but the dollar going down, the rest of the world markets having a little bit of catch-up move, and then continuing support here. The credit markets, I keep coming back to, incredibly strong. Again today, you have corporate spreads tightening up. Oil prices going up, helping that situation as well. So, a lot of things are working in favor of this idea of incremental progress in the equity markets, even if, in fact, it's all about what's on the come. And we don't yet know if, in fact, this economic comeback is going to be fast enough to satisfy the current valuations. But I think it's easy enough to see, what kind of levers are being pulled to get us here.
I'm glad you brought up the credit market, Mike. Did you see that the Amazon deal yesterday? I mean, they priced, I think, 0 to 15 basis points, pretty much as safe as cash. I think they were able to raise $10 billion. Today was another very busy day. It seems like a microcosm for what is happening in the broader market, that investors are just willing to take the credit risk despite the enormous economic challenges. Right.
And not even really seeing any significant credit risk when it comes to Amazon. They sold debt going out as far as 40 years. So you have a combination of enormous companies like Amazon that really don't need the money, but they're happy to take it at almost no cost and obviously put it to some kind of use that they think is valuable. On the other side of the spectrum, you have very much balance sheet constrained, distressed type companies that are getting a lifeline from these same credit markets. Maybe they have to pay up a little bit more, but it's creating a little bit of a buffer between, survival to the next phase here. So those two things are helping out, and they're sort of creating this perception of a cushion underneath the markets. How far it takes us, again, it's hard to know, but the thirst for credit is definitely not yet been sated.
I still wonder, Mike, we've had this debate before, in fact, as it related to Netflix. I still wonder whether it's a sign of a market top when a company that stocks at a record all-time high and they raise money via the debt markets as opposed to the equity markets. But anyway, I get the corporate finance argument. I still just think it's worth noting. S&P 500, by the way, up 0.6%, 7 minutes left of the session. Civil unrest protests across the country are posing a new challenge for restaurants just as they're beginning to reopen. And Kate Rogers has those details for us. Kate.
Hi, Will. Well, restaurant transaction data was beginning to improve as of last week. According to the NPD Group, total transactions still declined by 18% at major restaurant chains as of May 24th. Full service transactions fell by 49% and quick service chain transactions by 17%. Some 320,000 restaurant units in the U.S. are now allowed to offer some level of on-premise dining, but as things open up, some restaurants are now facing a new challenge in the wake of protests across the country, limiting some operations with curfews in place. Companies like McDonald's have had to limit some hours and close just a handful of stores. McDonald's U.S. president as well as Starbucks CEO, though, have both spoken out on racial injustice. Back over to you guys.
Kate Rogers. Kate, thank you. Warner Music is set to price its highly anticipated IPO after the bell. Leslie Picker back on Closing Bell. Welcome back, Leslie.
Hey,
with
Sarah.
The preview. Good to see you.
Thank you so much. Warner Music Group is the label for artists like Bruno Mars, Ed Sheeran, and Cardi B, and is set to finalize its price in, the next 90 minutes or so. According to a source, the company will likely price toward the higher end of the range, which would enable the selling stockholders, which is largely the Blavatnik family, to get a $1.8 billion payout. Warner Music won't receive any of the proceeds from the sale. Warner Music and several other deals this week are helping reopen the IPO market, which, as we know, was slammed shut due to the volatility that accompanied the pandemic. Guys.
I know there's been a bit back and forth in the music industry and the streaming companies and where they're valued the last couple of years, but huge credit goes to Len Blavatnik for seizing this asset in 2011 when the music industry was still kind of on its knees and trying to figure out how to be profitable in the age of streaming and online music consumption as opposed to CDs.
And they've really been able to do so, especially growing that streaming part of their business. They say that's now the biggest revenue driver. That's the biggest growth part of their business. And it's enabled them to really weather the storm in this age of COVID, where things that require more of a physical presence, which also represents a decent chunk of their revenue stream, they've kind of come under pressure with people not going into stores to purchase physical CDs and so forth. People aren't going to concerts anymore, but he's been able to grow streaming, which is higher margin. And of course, it has more durability in times like this, which has enabled them to go public right now.
Leslie Picker, good to have you back on board.
Thanks.
See you soon. Lindsey Bell, test of the IPO market or not so much, because this is an example of a company, as Leslie points out, that has been able to weather the COVID storm particularly well?
No, I do think this is an important milestone for the IPO market as we get past the pre-COVID crisis. So I think this is a very good sign. It's showing that the markets are operating efficiently. It's another positive after last week the NYSE reopened again. So this makes investor sentiment feel good. So this is a positive overall.